Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I worked at IRS 10 long years. I've worked thousands of cases. I have a team of former IRS agents, tax attorneys on staff. I'm a national figure in IRS resolutions. I have a large Facebook following, and I've been on all the national news stations: Fox, ABC, NBC, CBS, News Nation, Newsmax. Just go to my website, 777irs.com. Anyway, I want to talk to you today about the trust fund penalty and everything that you need to know about it as a former IRS. By the way, I was the IRS. So when you hear me speaking, I'm not, well, what happened to some clients, and I gather my experience. I was the IRS. So I used to set up the trust fund recovery penalties. So I'm telling you this as from the aspect of the former IRS, as a former agent, and what you can do to kind of help prevent that. So as a former agent, my job would be to come in and determine who is responsible. And so the first thing you do as an agent, you kind of talk to the owner, and you fill out these 4180 forms. The 4180 form is required on every case taken by the revenue officer, and it's an interview. I think a 4-page interview, and they go ahead and get all the information and data. They get it from all the people they think is responsible. They pull the corporate resolutions, they pull bank signature cards, and they do their due diligence of the corporation to gather who's on SunBiz. So they're gathering this information, and then the 4180 form, you should be familiar with it, kind of seals what they're doing. So by looking at all the public information and in bank signature cards and corporate resolutions and interviewing people, it's easy to determine who's responsible. So the agent can do one of two things. The agent can really zero down on who's responsible, or they can throw a broad net around everyone they think had anything to do. And a lot of lazy agents do that. They just throw all this net, and they get secretaries and anyone who walked in the door. A good IRS agent will drill down on who's really responsible. How you fight that is you say, no, it really wasn't me, even though I'm a part. I didn't do this, I didn't do that. This is the person that did that. So these are a little more complicated than most people think. I know how the IRS thinks of these. So, but the trust fund recovery penalty is going to be set up against those that the revenue officer thinks are responsible, and then they're going to send you a letter of assessment. They're going to send you, I think, a 2751 and another form. I think it's the 11 something. God, I think it's the 1153. I think they're going to send one of those. They're going to send both of those forms, letting you know that you are being held responsible and your right to appeal. You always go ahead and appeal that trust fund, because you may be able to settlement appeals. You may be able to get out of it. All depends on what your facts are, but you can kind of get out of these if you know how to do that. I will tell you this: if you own the business and you truly are responsible and you went ahead and signed all the checks and this falls on you, don't waste your money by hiring someone. IRS is eventually going to sustain that penalty against you. If you want to get out of it because you think you should be out of it, give me a call. Being a former IRS agent, I know everything possible to squirm you out of this. Anyway, call me if you need me. You know what the trust fund is. And there's one other thing that you need to know. If IRS sets this penalty up against you, if they do, then they treat it like a 1040 penalty. They go after you personally for this, and they try to collect the money personally. Anyway, I'm always available. Give me a subscription, a like. Now you know what the trust fund penalties. And remember, even though the IRS sets it up, we can maybe be able to win the case in appeals. Thank you. Give me that subscription.